Quick question. If I ask you right now what your firm's operating account actually spent money on last month, could you tell me? Not guess, tell me. Or would you have to go dig through QuickBooks or worse, ask your paralegal who's been handling the books between everything else she does or he does? Here's the problem. Most law firms think of bookkeeping as one thing, making sure the trust account doesn't get them disbarred. That's part of it, but it's not the whole job. Today, I'm going to show you exactly what it looks like month to month when a CPA runs your firm's books, not just trust accounts, all of it. So you know what you should be getting, whether that's from me or anyone else. Let's get into it. Hey everyone, I'm Peter Fider and I'm a CPA and the founder of Meatball Accounting. Yes, it's Meatball Accounting. We work exclusively with law firms and property management companies on bookkeeping and trust accounting, IOLTA especially. If you want to know what real CPA level financial oversight looks like for a law firm, not just once a year tax appointment, subscribe. That's exactly what this channel covers. Let's break down the actual scope. There are really four buckets of work. I'll walk through each one, then show you how they connect. Number one, trust accounting IOLTA. Every month, I tie out three numbers to the penny: the bank balance, the book balance, and the sum of every individual client ledger. This is the piece most firms already know they need. It's also the piece most firms think is the entire job. Number two, operating account QBO categorization. Every transaction on the operating side, payroll, rent, CLE, marketing, referral fees, court costs, gets coded correctly in QuickBooks Online, not dumped into a generic miscellaneous bucket. When it's coded right, your P&L actually tells you something useful, something that's helpful. Bill.com. Vendor invoices come in, get routed for partner approval, and get scheduled for payment through Bill.com. Nothing sits in an inbox. Nothing gets paid twice. And you have a clean digital trail if anyone ever asks what a payment was for. And number four, I think I forgot to say number three. And number four is monthly reporting. You get an actual report package, P&L, balance sheet, partner draws that you can read in 5 minutes and understand, not a data dump. A report that answers one question: is the firm actually making money or just busy? Here's a table of exactly what that looks like in practice. Now, the two areas firms most consistently get wrong: client cost advances. If your firm fronts costs on a case, filing fees, expert witnesses, court reporters, that money needs to be tracked separately and flagged for recovery when the case resolves. I see firms lose track of tens of thousands of dollars in advance costs simply because nothing was tracking them. That's real money the firm already spent and may never get back. My paralegal handles the books. This is the most common setup I see walking in the door. It's not a knock on the paralegal. It's that bookkeeping is the fourth or fifth priority on their desks. And there's no CPA level oversight checking the work. The books get close enough for 11 months and then something surfaces. Here's how it all connects in practice. Trust gets reconciled three ways every month, without exception. Operating transactions get categorized correctly as they happen, not batched and guessed at quarterly. Bills get routed and paid on a schedule through Bill.com. So nothing's late and nothing's a surprise. And at the end of the month, you get one report package that tells you where the firm actually stands. When it's run this way, you're not calling your bookkeeper to ask where something went. You already know. And your CPA isn't doing detective work at tax time. They're doing tax strategy because the books were already clean. Here's a quick recap of what we covered. Trust accounting is one piece of the job, not the whole job. Operating transactions need real categorization in QBO every month. Bill.com keeps AP, accounts payable, current and auditable. Monthly reporting should answer one question: is the firm profitable? Client cost advances need their own tracking or they quietly disappear. My paralegal handles it is a staffing choice, not a CPA oversight plan. I put together a free guide, The 5 Secrets to IOLTA Compliance for Law Firms. It covers the trust accounting side in more in depth, including the mistakes that actually trigger bar audits. Link is in the description. And if you'd rather just hand this off entirely, all of it, trust and operating, that's where what we, Meatball Accounting, do. Book a free 30-minute trust strategy call. Link is also in the description. If this helped you, hit the thumbs up. It genuinely helps other firms find this content. So subscribe for more trust accounting and bookkeeping content for law firms every week. My name is Peter Fider, CPA. Thank you for being here, and I'll see you on the next one.